Good evening, ladies and gents. Welcome to another video brought to you by Total Control Traders. Been a while since we did a video. I know I said it's gonna be back on full schedule, but ended up had something to do yesterday, so I do apologize for that. But let's get into it. So where it's market at? We came down quite a bit. This on SPX. This was a 10% drop over 8 days. There are a couple of scenarios I shared in the chat room, and I'm probably gonna keep it in the chat room here. Both bull thesis as well as bear thesis. It's something just ongoing right now. To give you a little bit of an idea, bear thesis would be in the comparison of 2016, and bull thesis would be in the comparison of pandemic time. So depending on what you're looking at, both sides thesis could very well work out, and depending on what the candles look like, you know, right now market is still in a choppy environment, and we are looking at a formation of a daily bear flag that's shaping up. Big potential for it, so be careful. Depending on what you're trading, use caution. Don't go oversized. Of course, if you're doing bears, you know, it's still in bears' favor. So let's get into the market. SPX, gonna start it off as usual. Looking at this, head and shoulders, huge follow through on the break of this neckline, break of this rising wedge, lower trend line. Big follow through so far, and we're now forming daily bearish divergence on the hourly. This is what we're tracking before, so or even right now actually. This is the upper trend line we've seen multiple rejections from. Look where we rejected from today. We're rejecting from that GP, drawing from the high over here to the low. So this last big drop, rejecting from that GP, as well as there is a potential lower trend line that's forming here on the 4 hours, on the hourly as well. So on this is not a strong lower trend line by any means. With this, we're only seeing 2 bounces so far. Into the close, you could call this the third bounce, but now looking like the chart is coming back down a little bit. It's not a strong lower trend line whatsoever. However, the bulls are going to want to hold this. So interesting reaction to FOMC today. Initial reaction is always, not always, 90% of the time is probably going to be a fake out. So looking at the FOMC early on, it was actually a little bit harder to look at today's FOMC because we popped and then we dropped and then we popped again. So we played bearish on the pop over here, back test of that GG trend line that we talked about. Today was a huge potential that discussed in the morning video, that we were looking at this GG trend line from previous multiple resistance and then became support, and now we're looking at a back test of it today. That's exactly where we rejected from. That GG trend line, as well as daily 8, as well as GP. That was a goal signal for the bears. The top fish area, amazing entry. So on the touch of this GG trend line, boom, to the downside. Now big bear volume coming in, but that's FOMC. So on the daily, volume is not too significant. One other thing I discussed, I don't know if I talked about it in the morning video, might have forgot about it. It was shared in the chat room that the last couple days, there is a notable trend line, and that's reminding me more so of pandemic times. So looking at this, where is this? This is 1:30. Yeah, so started Monday into Tuesday. So this was Friday, and then Monday we saw a gap down, huge dip buying, closing at the high of day. I think it was near the high of day. Yeah, closing near the high of day on Monday. And then what happened going into Tuesday? Tuesday's open was much further down. So strong close, gap down. And then Tuesday ended up being a weak close towards the end of day, sell off. So weak close into a gap up today. This very clearly reminds me of pandemic times. That's exactly one of the patterns that we had discussed on one of probably my first biggest option trade, noticing this pattern. And then on a strong close day, I can't remember which day it was, I went pretty big bearish puts, and next day it gapped down, 10 G's profit. The 11 G's profit is like 400%. But this is just very, very much starting to remind me of that. So with today, what we're looking at: open, drop down, small run up first, and then drop down, touch of that GG trend line on FOMC, and coming straight back down. So this is a weak close. Tomorrow, let's see if we get that gap up open. So far in the after hours, we're looking at a gap up. 1 o'clock, 1:30. Yeah, so this is the close of the day. So far, we're looking at a potential for a gap up. Let's see. Give it a few hours. You know, there's more than 14 hours till the market opens. Lots can happen until then. But in the meantime, what we're looking at is this lower trend line after hours. Bull's going to want to hold it, ideally pop up over it. So 4 hours is very notable that the trend has changed. But is this a breakout, fake out? That's the question. So with this, lower lows, lower high, depending how you look at it, you know, you could call this lower high, and then higher low and higher high. So that's 4-hour trend change has been obtained, but upon the higher high, a huge bear showed up, regardless of FOMC or not. You know, looking back at the chart, you're not going to be like looking at it saying, oh, that was the FOMC day. No, not many people are going to be comparing the dates of FOMC or even any known events kind of a thing to the chart while they're looking at it, to the market at least. So with that being said, you know, looking back at the previous FOMC, you're gonna have to check what the date that is. But without checking the date, you're just simply looking at the chart, right? So when you look at the chart, this is very simply a breakout, fake out that came straight back down. So that's a red flag. But the good thing is we did hold that lower trend line. So depending on how you draw it, you know, normally we draw it from the low to the low. That would be a major red flag. We lost that short-term trend line, and now we could be potentially looking at the back test before another rejection. So zooming in a little bit closer, it is actually looking a little bit more like so. Yeah, so trend line supports broke down and then back test. So after hours, you know, we could see bearish action. So far it's bullish action. We're gonna need to get back over that trend line for sure. Regardless, right now that low on the 4 hours is still a higher low, unless this continues. Of course, unless this continues, and this is a continued bearish move. But as of right now, this is a higher low. Gonna need to see that slow grind up in the after hours. The market is very uncertain right now. Now looking at the chart, there is another thing to note, that on the 4 hours, maybe even the hourly, might be clear on the hourly. Yeah, it's clear on the hourly, but it's also a red flag on the hourly. So there is a head and shoulders on the hourly that broke bull and straight coming back down. No follow through on the head and shoulders. The neckline being somewhere right here. I like this one better. So neckline being somewhere right here, bull break and no follow through. And let's take a look at the 4 hours. Is that the same thing? Yeah, so 4 hours is clear as well. Head and shoulders. And exactly the same. Bull break of the neckline, no follow through, coming straight back down. That is a red flag. I could have swore I saw a better inverse head and shoulders pattern. So as of right now, regardless, as of right now, what we're looking at is not the 8 hours. Daily bear flag formation, huge drop, daily bear flag. Now we're gonna need to see a hold of 4222. On the loss of that, that could be a further downside confirmation, bringing us the pandemic bears thesis. So be careful, do not get caught on that. Daily 8 still proving to be a resistance, a strong resistance for now. Right, next we're gonna take a look at NAS. Let's do a market deep dive. Actually, it's been a while, but all the markets doing the same thing. Not really any point doing market deep dive. Let's take a look at US dollars. US dollars is still popping, so that's bearish for the market. Quite interestingly, rate is not increasing, but we saw huge bears coming through. That's another red flag. US 10 years popping, so that bad for the market. Potential head and shoulders forming up. Let's see how this plays out. 1, 2, yeah, 2, 3 more days. This could work out very well. The last head and shoulders did not see follow through, So this is the last head and shoulders. Right shoulder, bear break, back test, and no follow through. And now we're potentially looking at a new head and shoulders. If this were to break bear, I would anticipate more follow through than the last one. This is a big one where it dragged out, held that money line. On this bear break, I would anticipate at the very minimal another touch of that money line. So US 10 years, keep an eye on it. VIX, very interesting today as the market dropped. So as the market was dropping, I was looking at VIX, UVIXC to be specific, thinking of picking it up. It was $15.08. By the time it closes, like $17.30 or something. But VIX is looking at it, 88 support bounce. One thing I don't like it, however, the pattern of VIX now is, yeah, it's somewhat negated. We have 2 more days to go on the week. Somewhat negated so far. We did make a new high, but huge upper wick so far. 2 more days. The bears are going to want to close it high from a VIX standpoint. Those are playing bears. Get it for this kind of scenario to work out. And if it does, that's what I mean by you do not want to be caught on the downside. If this is going to be a repeat, there is going to be huge VIX payout, ideally. Okay, next one is gold. Gold rejecting from that upper trend line. Probably can redraw this a little bit better now, actually. So multiple rejections. Yet another rejection. So breakout, fake out last time. Potentially for another breakout, fake out this time. So this is good for the market bulls. Ultimately, I'm looking at, market indecision overall. But hey, if you can get a bull position in after a 14% drop in the market, I think that's relatively safe, right? I wouldn't call it long-term entry just yet. At least have a stop down below. In the case that the market does make new lows, that is still a concern to be had. Because if the market makes new lows, as we just talked about, VIX can see some huge pops. But low risk entry from here. Regardless, earnings coming up on all the mega caps. The Apple, Microsoft just had its earnings. It beat, big gap up. I think it was 5% gap up, but then it sold off. And then what is it? Last BA, it's gap up as well, but of course. Strong sell off. You look at BA's earnings, it's like minus 2,000% surprise on their earnings. Estimate was minus 0.36 and reported was minus 7.69. The other one before that I can see over my charts are TSM, Taiwan Semiconductors earnings, huge pop as well. And yeah, that's looking at TSM. The big red flag on TSM is we saw the GP going all the way up to new all-time high, and the new all-time high shut down, shooting star coming straight back down, and now we're back testing this previous uptrend line again. Multiple rejections on this upper trend line. And when we saw the break, it was too much, too fast, and then we saw immediate back test followed by pushing up with the help of earnings straight into new all-time high. Boom, big red flag, straight back down, shooting star, reversal. And now we're back testing this upper trend line again. We did slightly lose it yesterday and we slightly lost it today. So that is somewhat of a red flag. But semis still looking decently strong. Let's take a look at now today. Before getting to other tickers, today we're just going to focus on BTC, Tesla, and some sectors versus individual tickers. Because when I looked up what's hot out there, what tickers people are talking about, not a whole lot. No one's talking about tickers. Everyone's talking about the market. So we're going to focus on market and just the major ones, Tesla, Apple, all those ones. And then maybe a couple of individual tickers, including TSM. Just going to quickly take a glance over AMD. So still bearish, a little bit of a bearish engulfing today. Earnings is coming up as well on February 1st. Based on bearish engulfing, I would anticipate lower prices to come. post. Ooh, after hours is up, eh? Is that right? Yeah, after hours is up by $2. So as mentioned, market is choppy. You know, when it's weak close, we see gap up. Strong close, we see gap down. Just something to note. Next one. While we're on the topic, let's take a look at NVIDIA too. NVIDIA decent strength. Oh, nope. So NVIDIA decent strength, holding that previous upper trend line. Lost GP, lost everything. Yeah, nothing specific. No bearish engulfing. Slight gap up in the after, or slightly up in the after hours. Microsoft, we talked about already, gap up and sell off. And Tesla. All right, let's get into the main bread and butter. So Tesla is very interesting. Earnings. Hey, earnings came out. Yeah, it looks like earnings came out. And you know what? On this kind of move, after hours is only up 0.65%. If you took lottos for this Friday, or even if you have any short-term options, they're probably going to get slaughtered on implied volatility. Man, if the market is going to go down, nothing is going to go up. So with this, Tesla is very interesting though. On the bounce is very strong along with the market on Monday. And then Tuesday, we saw some strength making new highs. So this is alongside market as well. Today, however, we saw relative strength versus the market. That could be just a run into the earnings. Based on this pattern, right now is still a daily bear flag. Stronger comparing to the market. Earnings, very minimal. Movement in the after hours from earnings, very minimal. Based on this, the channel is still there. So regardless, we are still in a monthly bull flag. So looking at this is a monthly bull flag. The flag is being right here. We're gonna need to see this being bought up, that monthly 8 being saved. And if that's the case, we could be looking at an extended leg 5 run. This is a slight increasing bear volume now coming into January. Regardless, this is Elliot's wave 1, 2, 3, 4, 5, very, very clear. So we could see a sideways action for a little bit longer before an extended run. But I like the chart. It's not bearish. No, at least from where we are, monthly 8, that key zone, we're holding it. That's the buy. That is the buy from not now, but back in Monday, back on Monday. And that's exactly where we did a scalp from. That money line, this bottom money zone, as long as this holds, there is no major red flag on Tesla yet. Now let's take a look at a couple individual or a couple sectors. One, the hottest, especially for us being located in Calgary, is energy. Oil and gas, you know, lots of companies, energy, so strong. Look at this run straight from the bottom, that lower trend line of this rising wedge. Okay, where we're seeing one bounce, this is almost a touch, and then another bounce, and another bounce over here. This bounce has been one of the strongest breakings through that upper trend line right away, immediate back test. Bouncing from the 0.382, the chart remains strong, even on the consolidation day like today, is still relative strength. So with this now, there is a slight chance of continuation into over here. Even if we're getting to the next resistance, we will potentially be looking at a daily bear divergence. So just be aware of that. But based on monthly and weekly chart, there is still room to move. So weekly RSI is at 68, no bearish divergence. Monthly RSI is only at 64.5. Lots more room to move. We could see a straight, maybe not a straight shot, but we could see this continuation into that next key zone before coming back down. As of right now, daily on a shorter time frame is the concern for energy sector. I like the chart though. Based on this bounce, I really like the chart. If you're playing this, depending on how much room you want to give it, I would probably use somewhere around here, 62 as the stop loss. You're just riding that momentum now. If you're in from back here, you're Gucci. If you're in from 0.382, you're Gucci. If you're in from today, keep that stop a little bit tighter. You don't want to be caught on the downside of this. similar to the market. One last and definitely not least is I wanted to discuss the shroom sector. It's looking a little bit interesting. Now let's take a look at, which one was it? Okay, so it is NUMI. It's the flat close threw me off here. So NUMI, very interesting, holding that key zone right from that bottom of key zone 0.49, huge bounce. This was a 50% move, 55% move, and we saw a big retracement. Now we're looking at a potential of a repeat for MMED. Maybe actually before we get into that, let's take a look at, see if there's an upper trend line over here. Breakout, fake out, rejection. Another 2 rejections here. Another 2 rejections here. Yeah, so there is an upper trend line from here. We don't need this. Let's clean up the chart. Yeah, I'll keep those for now. All right, so NUMI, nice bounce, back test. Are we going to continue going now? Now let's take a look at the potential legger play. Legger play of MMED. Same idea, upper trend line. Depending on how you draw, you could also say, you know, it's way up here or something like that. Or even here. That's only 1 rejection though. I like it here a little bit more because there's a lot more rejections, and then it also became support and then became rejection again. So with this, we're now seeing a break, somewhat of an upper wick, and we are seeing on the shorter time frames an immediate back test of this upper trend line. So let's see if we get going tomorrow. This is a legger play to the NUMI. It could take some time for this to work out. There is a huge gap left behind in between 1.2 to 1.26. That alone is a 5% move. Yeah, all right, a 5% up or down. So if we're to lose this higher low, okay, a little bit of a red flag because we lost this higher low already. I would have anticipated, based on these lower wicks, would have anticipated this to be continuation, but we saw a sell off towards the end of the day. That could also be the market though. Regardless, it's still a red flag. So 1.31, ideally you want to see a hold of that 1.31. We must hold 1.26 or we will be looking at 5% downwards for that gap fill. GP is around that 1.26, right at that 1.26 as well. All right, so that's it for today's video. Hope you guys enjoy the content. If you know anyone that may benefit from the video that we share, the content we share, please consider sharing our channel with them. Thank you for tuning in. I will see you guys in the next video.